Good morning, everyone. I wish I was saying happy sunny Wednesday, but it's looking a little gray. I don't know what part of the country you are in. We are just going to give it a couple of seconds. We know it takes a moment for folks to log in. So, as we're getting all cozy, getting comfortable to learn and to laugh and just have a good old time, I'm going to introduce myself. My name is Sadie Uribe, and I'm the media producer for the Los Angeles Regional SBDC. The SBDC is a national program with over 1,000 locations across the country, helping to stimulate economic growth through business advising and development. The LA SBDC offers no-cost services through funding provided by the U.S. Small Business Administration, SBA, and from the California Office of the Small Business Advocate. It's your tax dollars at work. The Los Angeles Regional SBDC network operates 7 service locations throughout Los Angeles, Santa Barbara, and Ventura counties. Our services are also offered virtually. We are here to help. We empower small business owners by offering tailored solutions through personalized one-on-one business advising, cutting-edge workshops, and comprehensive programs, all provided at no cost. We are dedicated to supporting your entrepreneurial journey every step of the way. Lori, I felt that one. I'm like, we're going to help some entrepreneurs today because I know finances. And like I said, I like being a little fly on the wall. And I'm like, that's right. Let's discuss finances. We need to discuss that as small business owners, right?
I know, and we need to continue with last week with Sebastian, but not have the CIA close us down like we did last week, right? I'm still laughing about that one. Look, I got some people in the chat that remember that one. No trick questions today, but you know what? Sebastian said he's coming back on and he's going to get me next time. So we got a game going here. So he's going to have the question in the back pocket. Okay, guys, no further ado. Let's get started today because we have a topic that we can talk about forever. So I want to make sure we have allocated plenty of time to do so. So, first and foremost, I just want everybody to know on Tuesdays and Thursdays, Sadie and we are still holding the Fire Resources webinar, getting very involved in the SBA loans and the application process. So, if I'm speaking to anybody that hasn't joined us for that and have any questions about it, please join us Tuesday and Thursday. Don't know how long we'll be holding them, but I keep saying as long as people show up with questions, I'm there. And we're getting about 20 people each day. So we'll be holding those until basically questions have been exhausted. Starting my April series on financial literacy and my legal structures. I always tell people if you tune into my show, that's where you're going to get the updated calendar. And I'm going to talk about something on that in a bit. So next week we got Adam Chapman coming on. He's another wonderful guest we've had on the show and had a lot of requests for him to come back on. He had been scheduled, and then when the fires broke out, we kind of went into a different direction, so I had to follow back and get Adam on. Now, Adam has helped a lot of startup companies and basically works with entrepreneurs to get their pitch down for investment. Called He's called the Pitchinator, right? I wanted Adam to come back on, talk a little bit more about that process, but also in that every single person in business is technically got a pitch to vendors, a pitch to clients, a pitch that comes in marketing. So I want to get some good insights from Adam on how we can all improve our pitch. So that's what we'll be talking about next week. I'm still putting together my full April lineup, but I was just saying to Sadie before we started today, I know you guys love the Ask Me Anything, which Sadie has coined AMA. And I think I promised you I would have one in February or March. And here it is, April, and I haven't. So I've got to be good to my word. So April 9th, get ready. Lori Williams live for the whole time. Ask me anything about anything. And I always say to Sadie at the beginning of these, well, we'll probably talk for, how many minutes we'll end the show, early if we don't have any questions. And then we end up always going over. So she doesn't even listen to me when I say that anymore. But yep, rich dialogue, everything is on subject. This is where I get in the hot seat and you guys get to be the interviewer. Okay, today I'm going to just talk a little bit about a slide that I presented some time ago, and we're going to elaborate on this. And it's like Lori being Lori. I know I keep talking to you guys about this, but it's so important to fully comprehend what is your legal structure that you're operating under and what is your tax status, okay? And I always tell people that doing the DIY, signing up for your own LLC. I always say don't sign up for an S corp on your own. I've seen people do that, or through even LegalZoom doesn't give enough support on this. But guys, seriously, every single week, I cannot tell you the number of people I meet with that either did not set up their legal structure correctly, did not pay the franchise tax fee, did not understand they needed to have another license, or are not effectively communicating what their legal structure is or properly abiding by the regulations of that specific legal structure. And what people think a lot of times is that when you sign up through the government Secretary of State, if you don't do something correct or you're not able to sign up for that legal structure because maybe you're a professional services, that somehow they're going to let you know, right? But they don't, because you're basically signing up through the Secretary of State as if you have this information, right? So when it comes up, typically is when somebody is applying for anything. So, for example, applying for a woman's own business or a minority owned business certification through the government to try to get into some contracts, or what we're seeing right now with the SBA loans or a bank loan. So, I'm giving you just three quick stories or two quick stories, perhaps, just to explain what I mean. So, there was a client that contacted me that was trying to get certified as a small business. They got denied. Couldn't understand why they got denied. They were set up as an S corp. They didn't understand what that meant. They went through LegalZoom, didn't understand about stock and the register that's needed to be structured in such a way. So when they went through the application, they asked them, I want to see your stock register. And the person responded, I don't have one. I'm just the only owner. I don't need to have one. Boop, decline. That is like not appropriate for an S corp, okay? Decline, kicked out, right? And then I'd explain to this individual, well, no, S corps are this, they distribute stocks, that you're a shareholder, you have to have a stock register, you have to have a stock book. Same concept. Someone got approved for an SBA loan that was a C corp, didn't have any bylaws. And that was something they definitely had to know with the bylaws, and they didn't have any bylaws in place, right? So they had to create bylaws. Had somebody that had a home business burned in the fire and tried to get a business loan. They had not been filing on their taxes as Schedule C. So, of course, that's what is looked for, and it's not recognized as a company. So, with these last words, I want to say that a lot of times I have people ask me or say to me, well, I set up an LLC so I would be legit. There's no such understanding. A sole prop is just as legit as an LLC, guys. In fact, about 80% of the companies in the United States are a sole prop. LLCs are not necessary in many cases as expressed. But what makes a company legit is the tax documents. Those are the Bibles of the industry, if you will. So if you're going to apply for anything, they're going to want to look at the tax documents. And so in the case with that company, they didn't have the tax documents, so the company's not legit. And interestingly, the individual had just switched to an LLC trying to be legit. And I said, well, no, filing the tax document would have created some legitimacy. So, on my last statement on this, how like if you ask a kid, how old am I? And they go, I'm 5. And they're so proud to know they're 5 or to know their address. You guys got to get to that point. I am an S corp. I am a sole prop. You got to understand what you're operating legally and make sure you're in compliance, because I'm seeing too many people in trouble. Quick shout out to Derek. The BOI is on hold right now. I'm going to say hold because there's new legislation that's coming out, but let's just say as of right now, no one is responsible for filling it out if they're a domestic company. I don't know where it's going to go. There's going to be some more announcements coming up in April, but for right now, nobody has to do anything on the BOI. Okay, guys, get ready to put any questions in, because my next guest is an expert on accounting and especially QuickBooks, and we know that there can be lots of questions. So let's introduce Dalia Fogenay. Is an accountant dedicated to empowering businesses through effective financial management. As the founder of DF Accounting Services, she has been instrumental in helping numerous clients streamline their operations improve their financial health, and grow their businesses. With a strong commitment to ethical practices and continuous improvement, Dahlia is known for her ability to simplify complex financial concepts and tailor strategies to each client's unique needs. Outside of crunching numbers, she's an avid learner, always staying updated with the latest trends in the accounting industry, and a passionate mentor for fellow entrepreneurs. Welcome back and back and back. You've been here so many times. And look at it's already happening. I said to Dalia before the show, she has her own fan club now. Okay. When she first came on the show, nobody knew who Dalia was. And now so many people have hired you. I can already see in the chat room everybody that is saying hello, hello, because you've got your own fan club already. So, Delia, for those that do not know you, give us a little insight to your background, and you're going to laugh when I say this. So, you were basically doing something completely different, had no accounting, and you decided to pick it up as a day job just out of no knowledge whatsoever, and you got QuickBooks certified, and now you're an expert. She knows why I'm saying that.
Yeah, you're so
Totally
funny.
knows why. So, Dalia, please tell us what a real, true accounting's background looked like. Let's start out that way.
Yeah, so I had over 10 years of working in the field, in the accounting field. I was working for this company. I was hired as like a salary employee to them. So what they would do, they would send me to different companies to develop their accounting department or take over someone who was on maternity leave, potentially people quitting, and then me kind of training the new person who was going to take over that permanent role. So they kind of needed someone who just jumps on board, figures out the systems, and just, pretty much learns it in a quicker way than someone else would, right? So I did that for a long time, and it kind of exposed me and gave me experience to feel comfortable to working with all these different accounting softwares because every company has their own, dealing with different payroll companies and just dealing with different areas in the accounting department because sometimes it wasn't just the accounts payable, it wasn't just the payroll person going on maternity leave or quitting jobs or needing filling. So that actually gave me a lot of experience. And after being exposed to that and just learning everything I could, right? Because what people, and this is what a lot of people are missing out on, experience is something big, especially when you come from a level where you get to get this experience by people who have built their companies to be these major companies, right? So you get to be exposed to accounting in that way and kind of see what is working for them, figure out their numbers and see how are they still in business and how are they this successful. So once I felt comfortable enough, well, I always tell everyone, once I seen how much the company that was hiring me to go work, and then I seen how much they were invoicing me for, I was like, there's no way they're invoicing me out for this amount. Like people are paying this much for my service, and they were paying me like less than 75% of what they were invoicing me out for. So it was a lot. And I was thinking I was making good money. And in reality, it just gave me more confidence. And when after having baby number 3, I definitely wanted to be more involved, but not even that, understanding that the world was kind of taking a different direction where a lot of people weren't going to school for accounting. Now you have more people wanting to be like content creators and make money on social media, which is nothing wrong with that. But there's less people who really had a passion for accounting, meaning more work in the work field for me, right? So I went into business just because a lot of people just kept saying like, Dalia, will you do this for a living? Can you help me for my business? And then it kind of started like with the neighbor opening a coffee shop and just seeing his coffee shop like succeed and one after another, I just started to build this successful business.
Thank you. And first of all, guys, so if you go out and you interview an accountant, you now know the questions to ask them to find out their background. Because Delia, I talk to people all the time and they have and where I'm coming from this, guys, just to explain is that many of the people that offer bookkeeping now, the way I like to explain it is they just are computer people, software people that don't have the accounting background. And for some reason, it's been sold a bill of goods to the small business community that you don't need the accounting background. If you understand how to use QuickBooks or you're QuickBooks certified, that's enough. And it's so not true. And I want to highlight one other thing you said that caught my attention, and it's so true. You spoke about the advantage of having the experience of seeing the big picture with the larger corporations. And this is the first time that you and I talked about this, but I have this concept that I always say where I, started in the small business world. I started as a little country bunking girl. I was in the small business. Then I left the tribe, went all the way up to the big corporations, was the CFO for 20, $60 million companies, right? Then came back to the tribe. If I hadn't left the tribe and came back to the tribe, I would be consulting on the same misinformation a lot that within the small businesses center. So it's when you leave and are able to come back then and have a better understanding is when you become invaluable, because you learn the best practices of the corporations that are audited in their numbers, and they have to be exact. I mean, that's so, so, so important on that. So let's start off by talking a little bit about I'm going to go in kind of a weird direction, but you'll know what I'm talking about. I am going to call it having personal responsibility for your accounting documents and having a relationship with your accounting documents, and when you can do it on your own and what you need to be doing if you're doing it on your own, and when you should hire someone. I know I'm giving you a big plate, and I'm just going to say run with this with experiences you've had when you've taken over things, how you check it. So people can get an idea, Dahlia, that it's not like I can just push this button and everything's going to sync beautifully. So that's what I'm going. You take it from there.
Yeah, so what I'm encountering, especially as I bring in new clients, but I've been dealing with it since I opened my business, is that a lot of people come with the expectations like, well, I hired you, then you need to know everything. And it's not really like that. Before I can even provide you any services, I need to know where you are financially wise, as far as like where your financials at, or can I look at financials previously? Um, I want to see the status of that, because that lets me know a lot, right? It lets me know, hey, did you know that you had this extra account? Did you know that you are actually using 3, 4 merchant services? Did you know that you need like 3 to 4 1099Ks? And they're like, what is this? Like, it's a lot that goes into it. Even on top of that is, do you know the rates they're all in? And a lot of times people are just like, no, I just signed up for it and I'm using this processor, but they don't understand. Well, you need to know those numbers, because this can be affecting why your expenses is so high. A lot of people, they're like, well, I've been doing my bookkeeping myself. I've been coding everything that hits the account. That's great and all, but do you know when it comes to doing accounting it's not just about coding. That's one aspect of it. But what people don't understand is the second that you're now invoicing people or taking payments, and if especially if you're not doing it in a cash basis, meaning you're not taking cash, right? You're doing it in the sense where you're using a software where you definitely know there's a fee involved. Now you need to create a sales receipt to match that, because whenever you code a deposit, it's not calculating the gross minus the merchant fees. So a lot of times people will come to me saying, well, we don't need you for like the previous year, or we don't need you like for last month. We just need you to start from now and on. And it's just like you don't have accurate books, because if you do want a loan, you do want to get some type of funding, you're showing them that you're actually ripping yourself off, because you're showing them that you believe you have the capacity to bring in over 250,000, but according to your books, it's only calculating the net. So you're really showing like 100 and something thousand, because you're not showing everything. So just that aspect of it is very important, because a lot of people who do it themselves come with the mindset, well, I just need you to take on from today on, because
Yeah,
everything else is gotta.
yep, you said so much in that. Let's unpack a few things on that. And that is so true as well in anyone that does tax preparation.
Mhm.
EAs or CPAs. As an EA, you have to make sure you ask for previous tax returns, because you've got to understand the story. So, people a lot of times think, well, whatever's happening in the past is happening, and that's not true. You got to bring it forward. But where I want to go is something you were talking talking about and really slow down and talk about this with individuals so they realize it, because many are using what is called the merchant services types of loans. And Sebastian and I talked about that a lot last week from a financial perspective. And I'd like to touch on this from an accounting. So I'm going to set this up, guys, and then Dalia is going to tell you some details on it. So a lot of, if not all of these type of, I think PayPal's one, I think Square offers it too. I don't know all the names that are offering it now, but Shopify offers it. You guys know what I'm talking about, where you're borrowing money and you're paying it back daily, usually based on sales. And then the fees and the amount that's owed is removed before it goes into your bank account, right? So I want everybody to think about this for a second. If you sell something for $12, let's just be really simple. You sell something for $12 that day. $12 is not going in the bank account. $12 is not. They may take away $2 for the money that you owe. They may take away another dollar in fees. Who knows? So by the end of the day, $9 is going into your bank account. Now think this through. Your bank account is automatically being synced with your QuickBooks or whatever software you're using. So what's going on your QuickBooks account as income? $9. Okay, now I got my IRS hat. Did you earn 9 or earned 12? Your revenue is 12. The $2 and 3, whatever number it is part of a loan, and one of it is interest. So you've got 3 categories. You've got a revenue, you've got interest paid on loan, which is a deduction, and you got money borrowed and paid back. These are 3 totally different categories. IRS treats them different. And so they should be separate. But Delia, I don't see too many small businesses that are not just taking that 9, it's going under revenue. The accountants are then taking that 9. And as a final statement on this, and where I became even more aware of it, is there was a client that was going for a bank loan and they wanted to restructure some of their current debt that they had. So they were saying, I got a Shopify loan, I got this loan, I got that loan, right? And so the bank looks on their income statement to see if any interest had been paid. They go, you're not showing any loans. They look on the tax return, no interest. You're not showing any loans because the CPA didn't pick it up. So the bank's like, how can you be applying to me for a loan to restructure these existing loans when you don't show those loans at all on your financials? So guys in the audience, we may have lost you a little bit. Hang with us. I'm going to pass it to Dalia. She's going to bring this back in. I think this is such an important point to understand. I want to spend time on it. Your
This
turn
is
to try to make it simple for them, guys.
yes. This is so good because I'm actually dealing with this right now. So what happens is people take on these loans, right? And what it shows according to the software is that money's coming out to pay these loans and money coming in from what you utilize from the loan, right? But nothing is being recorded as either merchant fees or as interest, right? So let's say you're using Square as a platform to receive payments. Technically, in a way, it's like a credit card, but just reverse, right? Like
Right.
they're collecting the money for you and they're charging you to collect the money on your behalf, right? Where back in the day, you didn't have to involve no one in your business. No one had to do the collecting for you but yourself, right? But because now credit cards are so like, accepting payment with a card is so it's 100% now. Like everyone's doing it, right? Now what they are doing is, okay, they use these platforms and they say, okay, thanks for allowing me to use your software to collect payment by a card. Now, those softwares are charging you a fee. Well, technically, because you're doing it this route, you're supposed to record those as merchant fees. This is how much it's costing me to even charge someone these $12, right?
Yep.
Exactly what you said. What is showing up is after they take out their fees, they're
Yep.
showing you that your capacity is only $9, not $12, right? So you're selling yourself short in one end. Then the other thing is the CPAs need to do their job too. And I kind of do my job before even working with the CPAs. So if I'm noticing I'm taking over someone's QuickBook account and I see that they use a third party, because you see the deposits from the third
Right.
party, but
Yep.
then I don't see no merchant fees,
Right.
I'm like, hey, one, I know you're caught up in taxes or whatever the case may be, but I'm surprised that your CPA didn't have you go work with a bookkeeper before, because how are they calculating how much you're spending on merchant fees? They're actually not calculating that. They're not putting that on the tax return. So exactly what you're saying. So let's say someone has taken out like loans, let's say hard money loans or just loans, right? And they're paying them back every single month. What I'm also noticing is that they're applying the whole amount they're paying back into one line item, right? It can either be on the balance, and most likely I always find it on the balance sheet. Well, clients will say to me, well, why do I need to send you statements? Like it's coded correctly. No, it actually isn't, because from each transaction, I have to split it. How much is towards interest and how much.
Delia, are you telling me that you're seeing people like if somebody borrows $10, let's say they borrow $10, let's make it a small amount, and there's a dollar interest, they need to take the dollar interest off the P&L because the 10 is just borrowed money. They're taking the 11, they're showing you the whole $11. See,
Yeah.
what's interesting about that, guys, and I'm going to talk about another thing in a second on that. I just wanted to clarify that is when they put that $10, which is actually money they borrowed and had to pay back on the profit and loss, it's lowering their net income because they're seeing it as a deduction, which is not correct tax wise. And really, guys, what we're talking about here, Dahlia is talking about the accounting. I'm talking about scary audits from the IRS. And I'm gonna follow back with one more thing when we're done here. But it's like all this is like you hear this little music, oh yeah, it's a mistake, it's a mistake, and then the IRS, da 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 dum. So remember, this all goes to the IRS. Please continue. I wanted our audience to understand that you're talking about they're not properly only taking the interest off the P&L. They're actually taking the whole payment. And I could see people mistakenly doing that because the whole payment's coming out of the bank account. So it's just coming into QuickBooks.
So we actually, even talking about that, for people who say I may not relate to that, but they relate to the other version I'm about to talk about, is there's two ways I see this done. Either they're not utilizing to write off the interest that they're paying into it, that goes on the P&L. And they're just putting the whole entire payment on the balance sheet, right? The principal and the interest.
Yep.
You don't have no idea how much you have paid on interest towards this loan. All you remember is I'm paying $500 to pay this loan off,
Right.
right? Um, and then the other way I see is that they're actually coding the whole entire $10 into the P&L, where technically year one, it's like a mind thing. When you look at your financials, it lets you know what standpoint you are financially wise. If you're writing off the whole $10, you're actually playing with yourself because you're thinking, well, I'm not going to owe that much on taxes because I have this much expenses. And
Exactly.
in reality, it was only supposed to be $1 hitting the profit and loss statement because the interest aspect of it is a write-off. And then the $9 needs to be on the balance sheet. So I see both, right? Um,
Yep.
the other thing, what people don't understand, and they like to blame CPAs, is that let's say they look at their profit and loss, and their profit and loss is showing a negative $2,000. But in reality, the reason why it's showing negative 2000, so they're expecting to talk to their CPA, expecting not to pay no taxes, right? Because they're
Right.
negatives. But then when the CPA looks at their profit and loss, it's like you're allocating the whole entire loan payment to hit your profit and loss. That's why you're negative.
Ah,
When the CPA makes them hire someone, because if you're doing this wrong, the CPA has to protect themselves because they
yep.
can get fined. So then that's when they tell people, hey, you need to hire a bookkeeper because they need to help you split this in half. So I'm seeing that a lot. And it's getting to the point where I feel like more CPAs are starting to know, hey, I can't take too much risk right now with certain clients that are doing it themselves because of that.
Yeah. And so in that, where we're getting to, guys, is that, and this is where I think a lot of people don't realize this. There are counting transactions that you need to make within the software outside of the software just syncing with QuickBooks. So this is where we may lose a few, but at least you'll get an idea for this. Talk about how you have to create a sales invoice. So guys, I want you to understand what we're talking about here. You can't just hook up the system and let it do the categories. You actually have to go in and make an adjusting journal entry is what we're talking about here. And many people don't even know about adjusting journal entries to make these things correct. And one other thing I want to say is that when a lot of these do-it-yourself softwares came out, people weren't taking these loans. They didn't have all these aspects of the Square and all the things that they're doing today. But I always say there's no such thing anymore as a small business. And that's because between all the accounting things, the loans, the POS systems, they're using as sophisticated financial instruments, is my banking terminology, right? That any big company is. So the smallest company sitting there selling widgets online through any type of these type of systems is suddenly dealing with the complicated things. So talk to us about the need to do adjusting journal entries on some of these aspects to get it correct.
So I love how you brought that up because me and you had a long conversation about this.
We
So
did.
So we just want to educate all the small business owners. Only because a platform is promoting something as a do-it-yourself platform doesn't necessarily mean that the accounting side is as easy as just processing a payment. I get that aspect of it. You put the amount you're charging a client, you have them tap their card, enter their card, whatever it is. That aspect of it is easy. But what people don't tell you, of course, is that when it comes to the accounting side of it, because you are involving a third party, now you're treating yourself like you are these bigger companies. You do technically need someone to be in charge of your accounting department, right? Because you need someone to create for each transaction that you charge on Square, you need to create a sales receipt. The sales receipt is what's going to pick up the gross, and it's going to pick up any sales tax. It's going to break down exactly why that deposit was for that amount. So let's say you charge somebody $50. Well, a sales receipt needs to be created because you need to let your software know, your accounting software know, this charge was for $50. It was for this service that I provided. From those $50, let's just say, just to keep even numbers, $5 went into sales tax. Those $5 are technically not for me. That's to be allocated into sales tax. I owe California these $5 because, I'm conducting business in the state of California. This now you're telling the sales receipt, okay, well, when the deposit of, let's say, because we got to account merchant fees, so that's $45, but let's just keep it even. You have $40 that comes in as a deposit. You have to match that deposit to the $50, and on top of that, your bank is showing you received $40, but you have to tell your accounting software, well, technically, this was a sell for $50. $5, please allocate it to sales tax. And then the other $5 allocated to merchant fees, because this is what this company is charging me to collect the money and to have it deposited into my checking account. Now, if you're not doing that, your software can be showing, oh, this is great because it's opening the avenue to, let's talk about how sales tax is being recorded as gross income or
Yep,
net
yep,
income. So what happens is, let's say you are doing it right to the sense where you are recording your merchant fees, right? But what I'm noticing is that people are claiming $40 was just strictly for it was the net receipt.
right.
$45 was, let's say $45, but they're not accounting that $5 of those $45 need to be allocated to sales tax. It does not need to sit in your P&L. So in reality, people are paying more money towards the IRS because they're showing a more bigger profit in a sense, because they're not saying, hey, by the way, this portion of it, I know it was deposited, but I owe this to California. And I see them cutting checks to the state of California, right, to franchise.
Yep.
But then you don't see where it's coming out of. It just shows that they're funding this on their own. So there's a lot of different avenues to look at it. but I hope I didn't complicate
Oh,
that.
no, and I think at the end of the day, a lot of times I say when I bring up a topic, if it creates more questions, that's what I try to do. It's if it, I'm just trying to create an awareness, and now I'm going to throw a huge loop into this, guys. So once again, there's some legislation I'm going to speak about. I don't know where it is because it kind of goes round and round. I'm not talking about the BOI this time, and I think I got the right form. I'm talking about the 1099K. This is the IRS. So previously, there's been a rule in the books that if you do transactions with, and I'm talking about like Vimo, not Zelle, but Vimo, PayPal, etc., and your transactions were $20,000 worth, then it is a requirement that these institutions send a 1099K to the IRS saying, $20,000 worth of transactions came through this account using PayPal, right? Well, that number is supposed to change for 2025. That means this year to 5,000. So Dahlia, where I'm going with it is that not accounting for those merchant fees and not showing that $50 in the account. A lot of our customers, clients are doing at least 5,000 through these. So if you then get if the IRS gets the 1099K showing, oh, it looks like PayPal accounts had 5,000, but you're only showing 4,000 because you didn't show the merchant fees and everything in it. You didn't show the true number. Now they're going to be able to audit it easier. Another way of saying this, guys, is this accounting mistake that the tax person maybe didn't catch either now has a paper trail that's going to be sent to the IRS to correspond between the two. That's why it is so important. And so it is a thing that you have to kind of sit down and go through, but just the statement is that there are journal adjustments that need to be done outside the direct linking with the bank statement. And that a lot of people don't even know. Now, someone asked a question, Nancy asked a question. I'm going to give them my opinion on it, Delia, and then you can say what your opinion is. You're more up to date on these software, but I'll tell you what I say, and then you can say. So Nancy said this may not be the place to ask. This is the place to ask, Nancy. We're talking about all these kind of things, okay? So here's the place. She's trying to find a sample or starter list of accounts line items that I should include when I set up Wave Quicken for new business. So here's my statement. I'm first going to address the line items. The line items should be two things. One, you should look at a Schedule C. I'm saying Schedule C because most of you are a sole prop or a LLC to see what accounts are required on the tax return so you at least have those accounts. Then you should look internally within your company to see what accounts you need to monitor. For example, a Schedule C has advertising, but you might want a sub account that says, how much did I spend on social media and how much do I spend on trade show so you can better manage. Now, I'm going to say, and Dale, please feel free to say differently than I did, okay? This is people's opinion. We are not saying anything about any software endorsing it or not. This is only the opinion of the people who are speaking at the time. Did I get that? Did I get the legal jargon? I'm not, I know, did you like that? I'm not a proponent of Wave or Quicken for business. Quicken is great for personal. It's not got a business application. I know a lot of people use Wave, and you could correct me because I don't stay up on these as much as you are. And in my knowledge of Wave, unless it changed, it doesn't provide the proper financial reports that one uses then needs to use. So I think that, okay, if I'm knitting little doggy sweaters and going to the flea market on a weekend and doing some cash and I want to put it in a Quicken or a Wave, okay. Outside of that, neither one of those to me. I would rather have somebody have a spreadsheet and keep the data in a spreadsheet than use those. Now, that was a hard stance and I could be incorrect. Delia, you answered Nancy's question and what you perceive.
Yeah, I think what's happening is there's all these softwares coming out saying I can sell it for, I can help you categorize your expenses for a cheaper amount than QuickBooks Online. But that's exactly what they're offering you. Categorizing expenses, not
Yes.
financials.
Yep.
You are now conducting yourself as a business. And I think we have to get out of the mindset of I'm going from being a W-2 employee where I don't have to really keep up with my financial. It's more like budgeting, right? Where you're now a business, you need to find an accounting software that will provide you financials because when it comes to taxes, They don't want just the P&L. They don't just want like a profit and loss statement. They want to make sure, hey, I need accurate financials. Do you know what your balance sheet looks like? Um, Even with an Excel spreadsheet, there are several Excel spreadsheets that give you the profit and loss, that give you the balance sheet once you punch in everything correctly. Now, these other softwares, they don't give you that. And even if you're using QuickBooks Online, keep in mind that QuickBooks Online has a version of it called Self-Employed. No business owner should use Self-Employed. That's more like keeping track of your personal expenses because they don't offer reconciliation. They don't offer no financial statements. So just be careful what you're signing up for. You're now a business, so you want to make sure that whatever platform you use offers all your financial reporting. You need to be able to see anything you want to like generate, you should be able to generate a report for it. If you want to see how much you paid contractors for 2024, you should be able to generate a report for that. You want to see when's the last time you reconciled? You want to be able to do those kind of things. The other thing that you touched on, so categorizing. I always tell people, yes, we can definitely research what kind of categories we can put on our software, right? Or create. But I tell people it's really different. It's the way that you process things. So for example, you provide three different services. If you're the type of person that wants to see that income broken down, like, hey, I want to know what I do QuickBooks training. Dalia wants to know how much her QuickBooks training is bringing her every year. Dalia wants to know bookkeeping alone is bringing her. I want to see how much cleanups are bringing me so I can get a better idea of what's working for my business or what I can double down on. Like, hey, by the way, monthly bookkeeping clients is bringing me a lot. I'm really going to focus more on this, which you have a clear image of how to grow your company more bigger, right? Other clients as well. Or even when it comes to cost of goods sold, you don't just want to stick everything under cost of goods sold. Some clients, yes, if you just have a standard cost of goods sold and you really just do one thing, for sure, don't overcomplicate it. But if you have different avenues in your business when it comes to supplies and material, when it comes to like a lot of people use supplies and materials, and then a lot of people like to break down the markets. Well, I sell food in the farmers market. I want to know how much I'm actually spending on food, and then I want to know how much I'm spending on cups, plates, forks, etc. Right? We break that down so they can have a clearer image. Do we need to negotiate with another vendor if they can sell us plates for cheaper because we're spending a lot? Do we need to find cheaper grocery stores to sell us cheaper food because we're spending a lot? This is when subcategories come into play. Now, I always tell people it's better for you if you're going to do it yourself, please hire a professional just to train you how to do it or help you build up the software, and then you can do it yourself. It's like someone wanting to take over and be their own defense for like court because they're like, you know what? I don't want to hire a lawyer. It's not that complicated. I know my stuff. You still want to get a consultation and book a consultation with a lawyer to kind of give you the direction of where you should go, right? The same thing with this.
Yeah, that's a good example. And you know what Dalia is talking about is really important. I talk about this in my financial classes, and that's the difference between financial accounting and managerial accounting. So financial accounting is gathering the data from your bank statement and putting it in the reports. Managerial accounting is extracting that data and being able to analyze it to make decisions on a daily basis. This is where I talk about you need to know your profit margins. You need to know if you're making money, right? And that's where these categories, you said it so beautifully. If you're selling food at a restaurant, you're also selling it as a cart and you didn't break it down in your software, you have no way of answering, well, is the cart making money as much as the restaurant? Should I get another cart? So all these decisions from can I hire somebody need to be made by looking at things in a detailed way. And that's why, like I said, I will spend a lot of time saying when you set up the chart of accounts, which is what we're talking about, what questions at the end of the year, if you knew the answer to, could you better manage your company? So if you say, how much did I spend on the cart versus the restaurant? Oh, we need a category for that. So that is so, so true. Now, Anam asked, why doesn't QuickBooks have systems built in to allocate what we were talking about, the expenses? And my answer to that is because there are things that are still basic accounting and needing journal entries. There's no way something could come in and do that because it has to somehow say, okay, this money went into the bank. Well, let me go and find out what the merchant charged. And there's impossible. So it
Yeah.
goes back to expecting your software or accounting to be automated. And Dalia, if there's one thing I could scream from the top of my lungs is, and it's really, I think it's the QuickBooks, it's the marketing end of these corporations that are teaching our small businesses to perceive that financial accounting and knowing their numbers is this side thing they don't even have to worry about. People spend more time on the social media perfect picture than they do on accounting. And I don't totally blame the entrepreneurs. I blame what they're being told by these software systems. So I'll let you go off on Autumn's question, but Autumn, it means that there's just a lot of things outside what the software will do. Your statement on that?
Yeah, so this is good. So just imagine how things were done before, right? Before, there's reasons why these big corporations have a
Oh, can
whole
we talk about the plumber?
yeah,
Yeah,
I'll get to that after,
the
okay?
plumber. Okay, keep going.
There's a reason why you see these big corporations, they have a whole accounting staff because and they have amazing software, expensive software.
Right.
They understand that the software, in order for the software to communicate what they needed to communicate, it needs a human hand behind it. The human hand knows what's going on in the work field. It knows what's going on, how we handle businesses. Every business is unique to its own. Like I don't never, let's say someone's an event planner. I never see the same type of event planner. It's always a unique type of event planner. No one does their financials exactly the same because everyone has different things and components to their business, right? So if you think about it, if these big companies who are making billions of dollars have not found a software to do it for them, and they definitely need people behind the software, and that's what a software is. A software is intended to provide for you to tell it where to go, for you to tell it where to go, right? Now, also think about this. The same company that promotes to do it yourself also has a service. So let's talk about QuickBooks.
Yep.
QuickBooks has a service where they have hundreds of people, bookkeepers, in that are on payroll for QuickBooks that will do your bookkeeping for you for like a fee. I think it's closer to the $300 mark. For a fee, it's like 267, something around there. They'll do it every month. They'll pretty much say, hey, you want to use one of our bookkeepers to help you with your QuickBooks? You can hire us every single month. So then if you think about it, why are they offering that service? Because
Right.
they know that the software needs a human touch to it. It's
I
not
love that. So true. So true. Because if they didn't, why would they even offer the service? If it was one and done, why bother? Oh my God, that's
if it
classic.
wasn't such a high demand thing. Like you have to study everyone and see what kind of services do they provide. Well, then there's a necessity on a human bookkeeper doing the work, the QuickBook inputting and managing the software, right? Now let's talk about the paper format. We have people who are using QuickBooks online and they have everything syncing and going together, but then they're also keeping track of their stuff on paper. Like I have a plumber client that he came to me for a cleanup job. This
I
client,
had to laugh at that. She has a plumber client that came with her a cleanup job. Isn't that funny, guys? Doesn't
and
anybody
then
find
Lori
that?
has a joke with that. So once
Yeah.
I'm done, she's gonna say I'm gonna give her little second to drop the joke. But for example, this client, they were syncing it, but they wasn't managing their QuickBooks. But then they hired me and they were like, hey, here's all the receipts for every charge that I made, every invoice that I made, everything that you see hitting the bank account has to have an invoice allocated to it. And I'm just like, oh, this guy, like his books are very clean, everything's very clean. His he has record of every dollar that he's bringing in, and there's an invoice behind it. So this is important as well when you have a paper copy showing you how much money should be hitting your bank account, because you should also have a way to process things and say, am I fully being relying on the software to send over my deposit? Because I have seen clients that have had $30,000 withhold without even Square notifying them, hey, by the way, can you give us a deposit account so we can deposit your funds? So it's funny because I was telling her, like, this client is very clean. He has everything organized and put together, and then she had a joke for it.
Well, I did a swear word on, but you know what plumbers clean up all the time, right? So I was like, well, at least he's got his plumbing clean, it's so
Yeah.
true. So while I've already overwhelmed you guys, but like I said, today is really to bring up important things. And without getting into enough details to confuse people completely, I want to, before we end today, talk about CalSavers. Now, CalSavers is not something that a lot of people on this call have to be concerned about. It's anybody who has an employee, right? And I had Zamari as my HR specialist come on to talk about the complications of having to set up CalSavers, which is basically you have to give the employees an opportunity to sign up or decline getting these retirement accounts that are I guess I could say properly managed through the state. That would be a way to explain it, right? So Zamari and I were talking about how important it is for the small business owner to make sure they follow the paperwork and make sure that they applied or had the denial. And we were getting all involved in this, right? So I'm already going, oh my God, this is something that small businesses have to know. And then Dahlia and I are having a conversation, and I mentioned what she meant. You mentioned CalSavers, and I go, oh, I know it's so complicated to get people signed up. And then Delia shared something with me about CalSavers that I was not even aware of, having to do with how it's taken out of the accounts separately from the payroll company. And Dahlia, I didn't even know this. So I want to spend a few minutes at least just giving an awareness. They can get in touch with you or do more research, but I don't think a lot of people are aware of it. So Delia, how does the CalSavers get taken out of the payroll and put into the bank account? And what does the person need to know about the accounting end of it?
Yeah, so CalSavers is a little bit more scarier for like small businesses to even think about it, right? So one, I definitely will start off by saying, please do not ignore that notice. If you were given a letter, you were sent over a letter and you received an email saying that you need to offer CalSavers to your employees. And for people who may not know about CalSavers, because they're probably just a one-man show, people who have even part-time employees, just employees that are on payroll, they are receiving this notice. CalSavers is regulated by California. It's like state law that you now, even if you're part-time. So before, when people were full-time employees, you had to offer them some type of retirement plan, right? Now part-time employees, they need to get offered this retirement plan, right? Because I guess state of California is seeing that a lot of people don't have money for retirement, things like that, right? So what's happening is people are receiving these CalSaver notices informing them that they now need to at least offer this service. If the employee decides they don't want money being taken, they don't want to put money into this retirement fund for them for their future, they have the right to decline. What people don't, one, I'm noticing a trend where a lot of business owners are ignoring this notice. And one, that is a real big no-no because the fees and the penalties are so bad. Like they're insane. Like the fees are insane, right? And then the fine for it. The other thing, which is kind of scary, and it kind of puts people who, let's say you have 2 to 3 employees in your business, right? And you've been doing the payroll yourself, you've been managing the QuickBook yourself because you're more focused on dealing with the financial side. And you can be doing everything correctly. You can be handling your bookkeeping correct, you can be managing payroll correctly. But here's the scary thing. You now need to learn something new. You have to learn how to communicate. So let's say one of those employees says yes. They want to put 3% of their check into the retirement fund, which is in CalSavers. Well, CalSavers doesn't work with your payroll company. They don't work hand in hand. So let's say you run payroll and you say, oh yeah, this 3% of this guy's payroll, like check, send it over to CalSavers. It doesn't work like that. What happens is you have to notify your payroll company, and especially for that employee, you have to notify, by the way, when I'm processing payroll, 3% of his pay stub is going to we're going to utilize that for a retirement fund. The payroll software is not going to do it for you, but it's going to withhold those 3%, right? It's going
So
to
it's
make sure
sitting
it
in
doesn't.
your bank account now, right? So it's
Yeah,
sitting there in your bank account, and you got to make sure you have a separate transaction to get that to CalSavers and that you document it, correct?
that's,
Because typically, if you have a 401k outside of this one, it was always handled through the payroll and they would communicate directly. And am I getting this correct?
yeah, they will send it over.
Yep.
So let's say, yeah, that automatically sends over. What happens now is you have to communicate with your payroll software, withhold 3%, right? 3% do not don't deposit the 3% to the employee. 3% is allocated to somewhere else. But rather than them sending over those 3% funds over to CalSavers, now you're gonna see an additional charge of those 3% being withdrawn from your bank account from CalSavers. On
Gotcha.
top of that, when you're done running payroll, let's say you run payroll and then those 3% are sitting there in your regular checking account, you now have to go communicate with CalSavers. It's like running payroll 2 times. You have to tell CalSavers, hey, I just ran payroll for this person. This is the gross income they brought in. These are the 3% that's going towards a retirement fund. Then they'll let you know what that is going to look like too. Like they have to make sure that you're really allocating 3% based on what that gross was, right? So from there, you enter those numbers, and then that's when they withdraw the money from your regular checking account. So it's a lot that goes into it.
It is. And you know what scares me about that is certain things come under civil liability, meaning when it goes to court, if you've done it incorrect, it comes under civil liability. And anything to deal with payroll and retirement can, and here's and I'll end this with this just to say, explain to everybody why I'm bringing this up. Now, this isn't about the retirement, but I'll tell you a really scary story, Delia. And this is a client that came through SBDC after this happened. Were using QuickBooks Payroll. Now, I don't know if they didn't set it up right. I can't say, but I'm more of an ADP paycheck person for payroll because they're in the business of payroll. So they
Mhm.
had 10 employees. They collected all the taxes from 10 employees, but somehow they messed it up in the system or something happened where only 8 of the employees collected payroll, Medicare, Social Security was sent to the government, and the two remained into their bank account, and it was a small amount, and they didn't do the audits at the end of the year like you're supposed to do, check how much like ADP does, right? And so they didn't know. 10 years go by, or not, maybe not that long, maybe 3 years, I can't remember the number of years, but the treasury will eventually link it up with the ADP and say this much money was deposited on this person, where is the money, because it was taken from their check. Well, when that caught up, yes, and that is, mistake or not, that is identified as fraud. And when I was going for my EA training, my enrolled agent, and I have to know all these things from the IRS, I remember reading that said if something gets identified as payroll and a fraud, every single person that touches this payroll can also have this against them. And I go, well, are they going to make a secretary that touches it? I remember reading this for my testing. Now, this is what made this so sad. The owner, got fraud and a lien on his house. His one daughter was in the accounting in the department, got a lien on her house, and the other daughter, who just sealed envelopes and passed out the paychecks, got a lien on her house. All three fraud and liens on their house. So this is serious, and I know that is payroll. Retirement, if this isn't done right, that can be scary, scary, scary stuff. So guys, I'm not trying to, make you so afraid to say, okay, you know what, I don't want to start a business, but thing I am trying to do is have you respectfully understand that when you are doing something as simple as selling something online at home, if you're engaging in anything with sales tax or you're using merchant services or you have a loan, the accounting in these really matter. So as we end here, I know we always go longer, but this was so important. I want to thank you, Dalia, for coming on. I know guys listening to this my audience, I know it was kind of a hard one, but it was just so important. I'm just trying to keep you guys safe. So any last, and by the way, Sadie, go ahead and throw the special email that gets people to me. If you guys have questions on anything I said, in addition, you got Dahlia's information, because I know there's some remaining questions that really are best to be answered on one-on-ones. You can reach out to me and schedule an appointment. Dahlia, your main messages, and I shouldn't say your main message. Now, your any last thoughts to the audience? Let's say it that way.
Yeah, so I do want to tell everyone, although these softwares are at a great value, they have a great price, which I would say they make it affordable for us to have financials. Before, even when you're doing it yourself, please hire someone just to train you to do it correctly. Hire someone throughout the year, here and there, every quarter to see if you're doing everything correctly. Because, like you said, you don't want to hear that your payroll wasn't set up correctly, and then now you've been paying everyone. Let's say one of your employees you make it seem like they're tax exempt. Well, you're getting them in trouble. It's not them. They're told you they weren't tax exempt. So you don't want these things to happen, right? Because the eyes of the IRS, they look at it as fraudulent. So I always recommend people hire someone just for like a 1 hour just to make sure everything is great. I know Lori provides a service through the SBDC where she goes over things, and if she feels like it's really bad, then she'll recommend one of us to you guys. I would say too, it's getting to the point where you guys will also see these platforms kind of sell you, hey, you can hire us for a book. We'll be your bookkeeper as well. Be careful
I'm
with
not
that
a
too.
big, yeah, I'm not
I'm
a
not a
big
big
fan
fan
of
of
the
that.
QuickBooks certified because my experience, Delia, is they don't have accounting backgrounds. They just are getting certified on the software once again.
Well, just to even educate them on what's happening. So what's happening is QuickBooks is hiring their own group of bookkeepers, right? And they have them as employees, paying them an hourly wages, right? Now, what you do have to understand that is those positions, anyone who probably from just started learning bookkeeping, they probably signing on just because the pay is people who really know bookkeeping, they're better off applying to a regular company for accounting services, right? So these people are like a lot of people who came from programs like how do you become a bookkeeper as a side business? So a lot of it is to where they're getting also these jobs because there was a course for it and helped them get in the way they knew how to answer the questions, how to go through the interview. But keep in mind, when a company as big as those companies start promoting this service, keep in mind, they're already getting a flood of clients wanting to apply for this service. With that being said, the demand on the employee is insane. So let's say per one person being a full-time bookkeeper for QuickBooks, that person is probably managing like more than 30 clients themselves. What that means for you is that your books are probably not being touched every day or on a weekly basis, or they're probably a month behind. That sucks because whenever you go on there and you ask for a report, they tell you, oh, okay, I'll work on it now. It's more better for you to find a bookkeeper that you can work on that is keeping everything up to date and then it's not so hard to communicate with. So just keep that in mind. There are bookkeepers out there that offer these services probably for the same amount that QuickBooks does. But because
Probably
you're a smaller business, you want to be in the know all the time.
you
That's
do. Well, thank you. We've ran over as always, but so important information. Thank you so much, Delia. You know you're going to come back on. I just think we really have to keep communicating this message to our small businesses. I want you to be safe from the government. have no bad letters, and be profitable so you can be happy. So, Sadie, I'm going to bring you back in to close us down. Sadie is going to stay on as always so you can get all the information on the chat, including Dalia's information or information to contact myself if need be. Thank you, everybody, for hanging in there on this. So, Sadie, was that enough technical discussion for you today?
You know what? I learned a lot. I'm not gonna kid, but my favorite thing is it was fun. It was so much fun learning all this stuff.
It is. And it's just like I said, it's like anything. The more you learn, the better off you are. And look at, we've got excellent responses in the chat as always. So I don't mean to be lecturing you guys all the time, but I want you to be successful. I have enough tears during the week on my daily meetings with people. I don't want you to get the nasty letter and have tears. So I'm trying to keep you from. So with that, I am going to say thank you again to Dalia for being on so many times to talk about these very complicated and important topics. I am going to see everybody next week on Small Biz Talk with your host, Lori Williams. See you next week. Bye.
Bye, Lori. All right, guys, don't worry. I'm here. I'm just going to put myself on mute. Take a second, scroll through the chat window. If there's something particular that you're like, wait, what was this link or what's that info? Just let me know if you need something and I can pop that right back in for you. But like I said, don't worry. We got time. Click on those links because once I close down the Zoom, the links are gone. So definitely do not worry. I am here. All right, guys, shutting this down. Let me know if you need anything. Otherwise, we will see you next week, okay?